Assalamu alaikum. Welcome back to another episode of DreamFar podcast. I am your co-host, Dawood Ibrahim.
Welcome. This is Abdisa Tufa. This podcast is for those people who are actually dreaming to invest in real estate, to learn about financial literacy, Islamic financing. That's all we're here for. Ladies and gentlemen, welcome again.
MashaAllah, mashallah. So anyone who's interested in dreaming far into buying a home, this is the right podcast.
Absolutely. Not only buying a home,
Investing
that's the first step into, investing, obviously, buy your primary home and also looking into investing in real estate, whether it's through buying multifamily residence, also maybe buying single family home, investing in real estate, or whether you want to buy an apartment building and invest in real estate. It could be a farm, it could be anything. We talk about investing in real estate.
Close, you can dream far.
Dream far. That's the dream far. It's close or far.
Close or far
here.
Perfect.
Welcome.
Okay,
So, how's everything with you?
Alhamdulillah, everything's good. How's everything with yourself?
Alhamdulillah, I can't complain. The real estate market kind of booming a little bit. We see some activities, more transactions happening. Those people has been sidelined for a while because of the market has been crazy. Yeah, I would say they're mostly back on the market.
Mm-hmm.
And if you put an offer on a house, it's easier to get under contract. That's a good news in real estate industry, because as the real estate professionals, I would like to see the activities. We like to see market moving.
Mm-hmm.
So that's how we get paid with from us as well, right? We get to help more people and do more transactions. And I think the market is a little bit opened up. Hopefully, it'll continue like this.
Yeah, absolutely. So what do you think about, the rates currently going back up? Do you feel like this could possibly impact the real estate market?
Yeah. So actually today, the election, it turned out something that we didn't expect. I didn't personally expect.
You didn't expect for him to win?
I mean, there was some indication, to be honest with you, because the economy, even though the U.S. economy, compared to a lot of countries in the West, was doing well, actually pretty well. The inflation was under control. It went down from what it was 7-8% to 2.5% right now. The unemployment rate actually is historically low, but unfortunately, the American voters are not feeling it. They're not feeling it because there's still the inflation. When you go to groceries, still crazy.
Yeah, that's what we see in front of us.
Exactly. I mean, people are, they have what they feel and what the economy is. I think that's what really impacted the election. And people make the biggest decision when it comes to election based on the economy, how they feel about the economy.
Yeah.
It's not about what is the GDP, what is the unemployment rate, what is the inflation rate. It's about how they're feeling, because the inflation really went up. Because what happened with the inflation is because once the inflation rate has come down, but the price of groceries has not come down.
Mm-hmm.
So people feel like the wage has gone up, but it didn't go as much as the inflation.
Mm-hmm.
So people feel like, especially people in the urban area actually shifted from Democratic Party to Republican Party.
Yeah.
Actually, the people in urban voted for President Trump, which will be in office in 2 months. First, Trump's term when it comes to economy was really good. Some people argue that was continuation of the Obama's economy.
It kind of was as well.
Yes, but also Trump, or in general, Republican Party, they are known, to be for business. They are known for deregulation. They cut a lot of regulations out. So that actually motivates a lot of people to invest in the U.S. That's why you see the rallies in the stock market. When Trump got elected, the next day the stock market went up the roof. The reason for that is because people's expectation that Republicans are good for the economy. So, and I believe as well, President Trump, being Trump, will put a lot of influence when it comes to cutting the rate. Obviously, Fed is independent. However, President Trump is going to have some influence as well on them. I believe they're already in the process of cutting rates. So I hope that continues. And then so that, we can see that people can afford to buy home, because that's one of the difficulty in the last 2 years was rates high, home price high, and barely people can buy home.
Yeah, absolutely. And is there like a prediction on how low the rates will go? If from what you're seeing?
Yes. Most economists agree that the rate's going to settle down around 5 point something, which is amazing, because from where it is right now, just if you asked me 3-4 years ago, 5% is very, very high. It's relative, right? I think a lot of people expect the rate to go down to 5%. So that would mean more people can afford to actually buy real estate. And also those people who got into purchase the home in the last 2-3 years, they will be able to refinance and lower their monthly payment, which is crazy high right now. So I'm positive about the US economy. I can always bet on the US economy. If US economy is something that you can be certain about, it's always going up.
Yeah, and it's interesting that we talk about this. For a lot of Muslims, they're always saying, if we are doing Islamic financing, why should we care about the rates if this is Islamic financing?
That is true. That's a very good question as well. Even in the Muslim world, one thing people need to understand, Islamic financing use some kind of benchmarking or some kind of pricing, right? We are in the US. So what we provide is a home financing service, right? So for that reason, we need to benchmark our pricing compared to those companies. Even though they do a riba transaction, they're also offering home financing transaction, right? So that's why we have to price our service based on that. One, to be competitive for our customers. We just because you're going with Islamic financing, you should not be paying more. We really believe that, and then we want to deliver that. Number two, we also want them to compare. It's easier if you have that pricing, so you can compare what you're paying for Islamic financing compared to a traditional mortgage offered out there. That's why we use the rate system. And there's nothing haram about using the percentage system. What's haram is riba. Selling for money for more money is riba.
Yeah.
Buying and selling. I can buy this mic for $10 and sell it to you for 5% profit. That's 5% is not haram. It's just because of the percentage. What makes it haram or halal is the content of the transaction. Are you trading money for more money?
Yeah.
Or are you trading buying and selling? You buying a product, or you're buying an asset, which is real estate, and selling that asset. That's the key difference. And the contract that you sign with guidance as well is completely different that you will see from a conventional lender. A conventional lender you basically sign a loan transaction that you're agreeing to pay interest. With a guidance transaction or Islamic financing transaction, you're not agreeing to pay interest. You're agreeing to buy the share of the financing company, which is guidance, in a term based on the partnership contract. And then we use a profit rate system to make it easy, to make it competitive, also for people to compare. And then that's what we have in the US as well. That does not make haram. I mean, the fatwa has been made on this, and it's not a concern for majority of our customers.
Yeah.
I don't hear this a lot, but it's not a concern.
Yeah, I mean that's the industry that we're in.
Yes.
You are in mortgaging,
Absolutely.
where you have to kind of use these rates. You kind of have to use it to as a benchmark. And
My question is to those people is what do you suggest? What else what kind of system should we use?
Yeah.
What is the alternative?
Yeah.
There's no alternative.
And even past that, every business, like let's say for example the grocery business, right? You will see Muslim grocery stores be competitive or
Yes.
benchmarking their pricing around like a Safeway that sells pork and stuff like that. It's just a way of benchmarking your pricing and knowing what you're selling and how and to be competitive.
There is one Islamic financing company that uses a different model. The Musharaka contract, it's Amin Housing. So Amin Housing uses similar kind of guidance program, which is Musharaka contract. However, when it comes to pricing, they use the market rent.
Yeah.
I think this also comes with a disadvantage to the customer. This is a fine way of doing it, but the problem is one, it will be practically difficult, logistically difficult to do, and rent goes up as well.
That's
every
true.
year with Amin Housing contract. Your rate could go up every year. That's unpredictable. I think our model
is what, like the rent for the apartments? What
they use similar house rent in the market,
okay.
and then rent's always going up.
Yeah.
So you are in an uncertain situation until you pay off. That could work for someone wealthy, so you can pay off the house in a few years and get done with. But I think our model, the guidance model, is the best model when it comes to benchmarking the price. Really.
Absolutely. I completely agree with you on that. So, the rates being around 7% right now, it's still pretty difficult for someone to buy a home. But do you think, which I'm kind of surprised by, is that like, the amount of homes being able for customers to like put in offers and accept. Do you think because the rate is actually higher, it's causing people to slow down with the competitive offers, or put in multiple offers on one property?
I think the way I see it, what happened in this market is a lot of people who are been in the market for a long time and then they just got tired out. And then it looks like
So they're starting to sell their houses as well.
yes, there's more listing coming on the market. People understanding this is what it is. Because at first,
It was like a shock.
yes, people, it took time for people to adjust to what's going on in the market because a lot of people have a home with 2.5 or 3% rate. Now, they were not willing to sell the homes, most of them. Either they want to sell it for top dollar. So those people right now, they kind of got used to what's 7% rates right now.
Yeah.
So they start selling their homes and buy another one. That's one. Means that increases the supply side of the issue, right? The other side is as well is the home buyers who were, were just competing just to get a house. They see that the home sellers are actually willing to reduce home prices, because most sellers have, they had a crazy price on the market. Now they could not find buyers in that price range, so they need to come down to find the buyers.
Yeah.
So the equilibrium is happening right now. The home buyers are willing to pay somehow, but the home sellers as well, they're reducing the price. So that's why you see more activities back in the market. I think we're heading to the right direction, which is good, because the amount the amount really, the rate that the real estate price has increased in the last 3 years after COVID is unhealthy. I think that's just been readjusted. It's normal for home price to go up 5% or 6%, 7% a year, but not 20%, 30%. That's what they do in COVID. I think that's been adjusted, and we're getting into the fair market homes right now. So that's why people are back. The home buyers are jumping back on the market. Those who are smart and get the property under contract, lock your rate with whatever available right now. 6 months to a year, I think there's a huge expectation in the market that the rate may go down, and then you can refinance. I think you play that game. Buy the property right now, and when the rate goes down 6 months to a year, you can refinance.
Yeah, so it's probably better to get into the market now, because we know once the rates go lower, you see a lot more competition on those properties.
But again, one thing is what I would, because real estate is very local, right? Some areas are still very competitive. I'm not saying everywhere, you can find a house that you can offer below list price. Some areas still people are putting 50,000, 60,000 above list price, 100,000 above list price, losing it. So it's local.
It depends where you're looking at.
Yes. But I after a long time, I have seen a home in Redmond listed for $1 million. Actually, I have one customer who's under contract in Redmond, $1 million list. That's the cheapest property that I've seen in Redmond in a long time. So homes are coming. There's more supply of homes available.
Your home property starting to go down?
Slightly, yes. I would say right now, most based on my observation of the market, I see home price right now in the market that equal to where it was back in 2022. It went up in 2023, it came down. So, because if you remember 2022, it was crazy because there was no supply of home for sale, and the rates were like just going up. Everybody wanted to buy, and people were bidding 100,000 above list price. I think the current home price right now is comparable to what it was in 2022. I think this is a good thing. It's a good thing, because now, at the end of the day, we want people to be able to afford a home. We want people to qualify, because the home price is going up crazy. It's difficult for people to jump into home ownership. Yeah,
absolutely. Good point. Good point. I'm glad you touched on that. So when we get into real estate, I think what's very important for people to know is that you have to kind of look at it from a long-term perspective, right?
absolutely.
You can't, because a lot of the times when you get into these properties and these homes, what scares a lot of the Muslim community is the fact that the home prices are so high, as well as the monthly payment would be higher. But like you mentioned earlier, playing the refinance game is a really good way to secure the property and wait until the rates go down. Because once you have property, you can there's so much advantages with it, right? Once you can always sell it when the property gets higher, you can rent it out if you want to go live somewhere else. You can also own it and get another property as well, and make that property as a rental property. So I would always advise for someone who's trying to get into real estate is that.
No, you're right. I mean, I agree with your point, but there's a misconception that investing in real estate is like, looking at the property appreciation. That's not the only investing. You're actually making the most money. Let's say if you have a tenant, all right. Let's say if you own a home, it's an investment, not residential home. Let's say you bought it to rent it out as an investment, right? Your tenant is paying down the mortgage balance. You actually make more money in the long run by paying down the dates. And also in the long run, you will have an appreciation. It's obviously because inflation is there. The home price is going to go up in the long term. That's fact, right? It's a long-term game. If you are looking to invest in real estate to get rich quick, not really. I mean, don't get into real estate. When sometime property price goes down, you actually feel like you might have lost, but it's a long-term game.
Yeah. What are the properties like? I'm sorry, I don't mean to interrupt you, but in terms of when we look at locally, like Auburn, Kent, Washington, for a single family house, what's like the average property here?
It depends on the area. It depends on what kind of house that you're looking at. The average home, let's say a 4-bedroom, a 2.5 bath, single family home in South King County area is probably from 650 to 750, depending how old is the house, depending how many, how the floor plan is.
So how much like income would you need to qualify for that?
Qualify for $650,000 home with the minimum down payment of 5% down, you need to make at least $100,000 a year.
100,000?
I would say $100,000, yes, a year. That is pretty much like $8,000 a month.
Yeah,
$8,600 a month. Provided that
for a home that's 650,000.
650,000. Provided that you don't have any liability, you don't have a car payment. This is a rough estimation. Obviously, it depends on a lot of scenario.
Yeah,
but roughly, as someone who's wanted to buy,
with the rates at 7%.
Let's say someone who's want to buy a home, $600,000 home, they need financing of $550,000. If they have an income of $100,000, they should be good.
Oh, okay. So you're going off 550.
Yes,
you could buy a home.
yes.
Okay,
It's a rough
with
estimation.
5%. Okay.
If it goes to 650, and then you need financing of 600,000, maybe you're looking around maybe 120 income. And if you're going higher, 700,000, you need 150. It depends as well. If you have a good credit score, we can go up to 50% of your DTI or debt to income ratio. That will give you some room to play around. It all depends really on case by case. Some properties, they have lower property tax, lower home insurance policy on some homes. So that also plays into a game. But in general, a rule of thumb will be $600,000 purchase price with, let's say, 10% down. You should, if you have $100,000, you're comfortable. It should be good.
And how much would you say is the closing costs and with including down payment?
If you buy a house in Washington state, at least, you should estimate 1.5% of the property purchase price as a closing cost. Closing costs are like, your third party fees. Like, it's like when you buy a car, you have a fees, a registration fee, or this government fees and stuff. When you buy a home as well, there is a company called escrow company that needs to register the name, the house name, the title under your name. They need to do the settlement of the closing, pay the seller, pay everyone involved in the transaction, record the deeds to the county. That costs around 1.5% of the property price. If the house $600,000, you can around $9,000 closing cost, and then that's pretty much it really. Then you have your down payment. Let's say if someone has wanted to buy a home, $600,000 was 5% down. 600,000, 5% is what? 30,000. Plus your closing cost $9,000. All you need is cash out of pocket is 39,000, and you can buy a home.
That's doable.
Yeah. Even if you want to put 3% down as well, there's an option as well, provided that you have a good credit score, provided that you're a first-time home buyer, you can put 3% down, right? If the house is 600,000, 3% that will be 15,000. 15,000 plus your closing cost stays 9,000. So 15 plus 9, around 24,000.
And how much are you looking at as a monthly payment?
Well, it depends. It depends on your credit score. Obviously, the lower the down payment, your monthly payment is going to be higher. My recommendation always, if you have the saving, if you have the money, if you have the means, is to bring 20% down.
Yeah.
That way you can avoid the PMI or the mortgage insurance policy. Mortgage insurance policies, if anyone is putting below 20% down, so the mortgage company will require you to actually insure the mortgage, which means that you're more risky. That insurance could run from $50 a month to $400, $500 a month, based on your risk. Because if you have bad credit score, you're more risky.
Yeah.
Means that you may have to buy a mortgage insurance. If your debt to income ratio is above 45%, your mortgage insurance probably could be double. The ideal place to be is always anyone who wants to buy a home. I always recommend it's the ideal place to be is above 700 when it comes to credit score. It doesn't mean that you need to have a credit score of 700. If you're struggling to improve your credit score, it's okay. You can buy with whatever you have, but buying a home is a process. It's not overnight.
Yeah.
You are saving money for down payment. You're planning. You're looking for the house. I think I would say put extra effort to improve your credit because it would make a huge impact on your overall financial capacity or the mortgage terms. So having an excellent credit score above 700 is amazing, which means lower monthly payment, better term, better rates. It's a good thing to do. So PMI is a very important thing. A lot of people don't know about. They mix it up with home insurance, mortgage insurance, title insurance. What is all of this insurance, right? Mortgage insurance is if you're putting 20% down or less, anything below 20% down, you are required to pay home insurance, mortgage insurance. And that will terminate when you hit 22% of the mortgage. Means like if you pay your balance up to 22%, will automatically terminate. Or when you reach 20%, you can reach out to your financing company to cancel it for you.
Yeah.
That's another option, but this is a very important point.
Yeah. Have you seen anything where they've mentioned the Republicans mentioning some type of assistance for home buyers to buy a house in terms of like down payment assistance or anything like this?
The Republican Party, it's not a party of the poor, That's
true.
the Democrat. I mean,
No, but I thought there was some type of like incentives that they were trying to push in terms of people buying homes.
that was Harris.
That was Harris's plan.
Harris had a plan of
That's true. That was actually Harris's plan.
she had an opportunity economy where she was offering 25,000 for first-time home buyers. What was amazing, but I don't think Trump have talked about that. I didn't even bother talking about it. Trump was focused on immigration, deportation. That was his plan. Actually, Biden also was actually offered 15,000, but I don't think it went through Congress. I don't think it would ever reach anyone actually got the 15,000. But there are a lot of programs that statewide. In Washington State, we have a lot of programs that's offered for first-time home buyers. But always,
like in terms of like
my
FHA.
recommendation just save the down payment and buy it yourself, because most of them come with conditions. One actually they told me that to get the down payment assistance, I asked around, you have to be a registered voter or something. You have to vote. You have to. It comes with a lot of requirements. For that reason, I think it's always best to save your down payment and put at least 3% down.
Yeah.
There's 0% is offered only on VA loan, and there's no Islamic financing for VA loan. But it's always better to put down payment. I never recommend anyone to actually buy a real estate with zero down. Because those actually people are actually the one foreclosing on the home. It's better for you to put down payment and have some equity in the house. If the house goes underwater, at least that would help you.
And most of the time, you need to do some type of improvements on the house too, whether it's changing your carpet.
Zero down is, some people could benefit from it, but I'm against that actually. There's a lot of scam out there. Oh, buy a real estate with zero down, and those people end up getting foreclosed on the house. And those smart investors put 20%, 30% down and buy those homes and make money out of it, because 0% down means your rate's going to be high, your monthly payment is going to be higher. I don't recommend those. And down payment assistance, if it comes with no string attached, if it's really a grant, it's free money, Allah, take it. But usually there's no free money.
Yeah, I hear you.
It comes with some kind of strange, some kind of, you cannot sell the house in 5 years. You cannot, if you sell the house in appreciation, you have to pay back. It comes with a lot of attachments.
Yeah. Do you think there's any benefits in terms of going towards like townhouses and condominiums?
Oh yeah, if you can't afford, with this crazy market, if you can't afford a single family home, I think it's ideal. It's also, if you have a small family, there's no reason for you to buy a single family home. There's condos, townhouses for people who need them. If you have a big family, it's understandable. You need the yard for kids to play. You need a big space, or maybe the cinema room or the guest room, whatever it is. You have a big family. that's what you need. That costs money, and probably you have to pay a premium for it. But also, if you don't need that big space, you can buy a townhouse. Townhouse will give you your own garage. You only attached on one wall. Sometimes townhouse also have a backyard, and advantage as well. The HOA covers the whole property. You don't have to worry about your insurance. You don't worry about changing your roof, maintaining your windows. All that stuff is covered by the HOA. And those HOAs also sometimes they have community parks. It's better to live in a townhouse. I believe it's better than living in an apartment. At least you have an ownership, your property appreciating value, you're investing. You're not.
How much are those
destroying
HOAs? Like
money.
what, $300, $400?
In Washington, it depends from state to state, location. But in Washington, I would say 300 to 350 is an average HOAs these days. Usually the HOA covers like they maintain the lawn, they maintain also the park, community parks. If there's a snow, they clean the snow, they clean the leaves. I mean, they do a lot of stuff, and there's some actually, some of them include water, sewer fee, trash. So it's not bad.
Yeah.
Some HOAs actually they give you some townhouses actually they're very luxury
Because of the HOAs.
the HOAs, and actually even better than single family home.
Yeah.
You have gated community. Absolutely, it's actually nice.
Yeah.
Yes, HOAs are nice, and especially the HOAs are cheaper compared to a single family home.
Has it gone down nowadays, or is it's always been set price?
HOAs, for example, I mean, it depends. Like, it just depends on community to community is different. You can never give a price.
Yeah.
But if you ask me in South King County area, you can find a decent HOA, like a townhouse for 350, 370, even 250, 260. For a starter, I think that's the ideal type of property to buy for HOAs. As long as you want to make sure that the HOA dues are manageable. There's no assessment. Sometimes they do assessment and they end up hitting you with a higher monthly payment. If you can avoid those, I think HOAs are a good investment. And with our financing with guidance, we can actually, whether you want to buy a single family home, townhouse, condominium, multifamily home up to 4 units, we can finance those with no problem.
Yeah.
And anyone who's looking to buy, someone young like yourself, I think is I mean, the biggest thing I think for first time home buyers, they just want to buy a home. Like, hey, I want to buy a home.
Yeah.
But like buying a home itself is like, what kind of home are you when you want to buy? What's your priority? Do you want to live in a better school for your kids, or you want a bigger kitchen, or you want to close to the masjid, or close to school, close to your work? Have the right expectation and say, hey, what's my top priority? I think that's where the first day to start. And then what do I qualify? That would be the next step.
Yeah.
What can I afford?
I think if you're someone who's looking to buy a house, you don't want to be in a situation where when you get into the house, you're so tight financially, in terms of like, the mortgage is hard for you to afford, even though if it's 6 months to a year, but that's still some time, you still have to sit there and afford it, So I like what you said earlier. I think if you get to a point where you can afford 20% down, you still have another, 6 months to a year savings in terms of like emergency funds, and as well as on your DTI. I know we say 40%, but if you're going to go into something with that amount of responsibility, and life comes in so many different things, many different things happen, especially if you have kids and you have a lot of things you go through. I would want that DTI to be like around 25 to 30%. In that type of range.
No, I hear you, but also, I mean, not everybody needs to wait until to get 20% saving, because by the time you save up money for 20% down, the home price goes up. You will lose. So I'll give you my own experience. I didn't put 20% down when I bought a home. I put 10% down. And then
you still probably had like at least 6 months to a year in terms of like reserves. Is that right? Are you?
Yes, of course.
Yeah.
Of course. That's why I put 10% down.
Yeah.
I could have put 20% down. But I know that the benefit of to putting 20% down. However, I felt like, I will need that reserve money. For that reason, I put 10% down. And then in a year or so,
how was your DTI? I'm sorry, don't mean to interrupt.
Yeah, the DTI was low. I don't remember really the DTI, but it was not an issue at all to qualify. I put 10% down. And then in a year, when the rate went down, I put additional $10,000 to bring it to 20% equity, because property appreciated in value. So when I refinance, the one, the mortgage insurance dropped. Two, I have 20% equity. The monthly payment went down as well when I refinance. So I had almost 20% equity when I refinanced within a year. So without me putting a 20% down, I actually had a 20% equity. And I've seen that a lot for customers. So by you getting into the house with the 10% that you have, you actually build in equity to get to 20% down.
Yeah.
But if you sit in idle, the home price goes up. Your 20% right now probably is 10% in a year or two.
Yeah.
So it's and I'm saying that's an ideal situation, putting 20% down to avoid the mortgage insurance, to get a better monthly payment, lower monthly payment, better mortgage rate. It's true. However, you don't have to sit down and wait for 20%. That's wrong as well, because you need to time in the market, not timing the market, right? You need to stay in the market, whether it's real estate, investing in stock, is how long you stay in the market. It's not timing the market. You can't just say, oh, I'm going to buy the house today. I'm going to benefit today. I'm going to make the money today. No, it doesn't work that way. Buy as soon as possible. And then while you're living in the house, paying down the mortgage, your property price appreciates, and then you build an equity through time.
That's true.
Yeah.
That's good. Well, I think that's it for today, inshallah. Hopefully next time we can maybe do a live on Instagram or on TikTok, where we can answer questions on live. But as for now, this is Assalamu alaikum. Until next time, inshallah.
Until we DreamFar, continue to DreamFar in your pursuit of investing in real estate, financial literacy, and Islamic financing. Please like and share this video. We appreciate your support. And if you have any question, things that we would like us to discuss about, type in the comment box. Again, thank you so much. Have a good one.